Home Depot is one dividend stock down 32% that I think you're going to regret not buying on the dip. In this video, I will explain why I think that's the case. So let's begin starting with Home Depot's dividend yield here. It offers investors a reasonable dividend yield of 2.75%, and Home Depot has done an excellent job over the last decade increasing its dividend payment. Investors from 2012 who bought Home Depot stock today are now getting a dividend that's nearly 6 times higher than they were getting in 2012. 6 times higher. So if they were getting, for instance, $1 per share in 2012, they're getting close to $6 per share in dividends today. That's an incredible increase in just 10 years, and investors in Home Depot stock today can reasonably expect Home Depot to continue increasing its dividend over the next decade. Maybe not at the robust rate from the previous decade, but something higher than what it is today, something meaningfully higher than where it is today. And that's because Home Depot has done an excellent job growing revenue. Look at its annual revenue from the last decade, growing from just over 75 billion all the way up over 157 billion. Of course, Home Depot was a significant beneficiary of the coronavirus pandemic. Home improvement was a very popular pastime during the lockdown phases of the COVID-19 pandemic, and still Home Depot has retained that elevated level of revenue even as economies have reopened, even as consumers have changed their spending behavior. Home Depot still commands the significant portion of revenue that it attracted during the pandemic. So people started spending on home improvement projects, and now they might not be increasing at the same rate, but they found that it was fun, it was worthwhile, it added value to their homes, and it's something that they wanted to keep doing. Maybe not doing more than they have been, but just at a similar rate. More impressively, Home Depot has been able to increase its operating profit margin as it has increased its revenue over the last decade. Its operating profit margin was close to 10.5% in 2013. That has steadily improved all the way up to 15.27% as of its most recent update, as of the most recent trailing 12 months. Home Depot is just incrementally getting better at doing what it does, right? Finding out what its customers want, getting more efficient at ordering those products, negotiating lower prices, doing better in terms of logistics, doing better in terms of using its floor space. All of those little things that it's done is adding up to incrementally increase its operating profit margin almost every year, going up all the way up to 15.27%. And I love that trend line upward. I love to see that when companies are growing revenue, it's also leading to increasing profit margins because they're just getting better at what they're doing. They're able to negotiate lower prices, all of that economies of scale. I love to see evidence of that, and Home Depot certainly demonstrates that in great magnitude here. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. And finally, you're getting Home Depot stock at a relatively cheap price because of that sell-off that I mentioned in the beginning of the video. Because it's down 32% off its highs, you're getting to buy Home Depot stock at a forward price to earnings ratio of 16.76. That's near the cheapest this stock has been going back to the beginning of 2022. So a long time, near 15 months, that you haven't been able to buy Home Depot stock at this valuation. So you're getting an excellent company delivering excellent financial performance, growing revenue, growing profit margins, growing dividends per share, all at a relatively cheap price, relatively inexpensive valuation. So for all of those reasons, I think Home Depot is one dividend stock that you're going to regret, that you might regret not buying on this dip here. All right, so that's all I've got for this video. Thank you so much for watching. I've picked some other videos that I've done that I think you'll enjoy. Please click on one of those. They're popping up on your screen right now, and I'll see you over there.